Hello. I see there's one of you here. So Brenda's here. I appreciate you hopping on. Hi, nice to meet you. You're muted, just so you know.
Hi,
Where are you at?
I am in the Kansas City area.
Okay, cool. So how did you find me?
One of my friends saw you at the Mary meeting, and so I just the other day watched your presentation from there off of the Mary's website,
The Mary meeting?
like from a while back.
Oh gosh. Like, is there okay, like a presentation like on storage, or what did I talk about?
Yeah,
Or
you did storage. Yeah.
Okay, cool. Okay, so are you looking to like invest in a fund, or what are you thinking?
Well, I want to kind of understand your fund. I'd like to, I'm in a syndication in an apartment.
Okay, cool.
And so I need to I mean, I gave my money and I don't really understand it, which is kind of
Okay.
crazy.
Yeah. Well, I mean, hopefully it's an apartment, right? So hopefully it's a good fund. But yeah, you should definitely understand, at least a little bit. Do you know how to run numbers and stuff?
A little bit. I
Okay.
kind of play with some spreadsheets every once in a while. And so,
Okay. All right, good. Well, we have a financial model, so I'll kind of show that to you. So typically there's like maybe 3 to 5 people that show up to this. So maybe somebody else, a couple other people will show up.
okay,
But yeah,
great.
so I'll just go over the offering with you. I'll just go over kind of what we do. I'll show you where to find everything, and then you'll be able to look at the financial model and put your number in, and it will kind of show you the numbers and stuff on how much money you should make. Okay.
Okay.
Okay. All right. So let me get in here and I'll pull up the fund portal. This is the place. Have you got into this yet or no?
No.
Okay.
Oh,
I'm gonna put this link
no.
in there. Yeah, to the chat for you. And then I'll put it into the Zoom chat here. So you don't have to do it now, but what you're gonna do is you're gonna come to this website, and then you're going to just create an account. All right, you want to access the PPM is what you want to do, okay? And that is where, once you access the PP, if you click this, you just have to fill this out, then you basically start an account inside the portal, okay?
Okay.
And then once you do that, then it'll look like, let me see, this is what it will look like. And you'll come in and it'll kind of look like this a little bit, okay? And this is where you're going to get access to like all the information about the fund and stuff. And I'll show you how to find everything. But the PPM is right here where it says the PPM. And then you could view this. And then you can just go through and you can read it. So the PPM is like the Bible of the fund.
Okay.
And it's like, okay, so it kind of shows you the rules and regulations, everything you have to follow, how many shares you get, everything, the structure, the offering, everything's all in here, okay?
Okay.
And then all
Great.
my information is in here, and the operating agreement is in here, so you could learn a little bit about me or whatever. So it's kind of a lot. It's 100 pages, but really, this is what our fund manager follows. His name is Adam. And he goes by this book is what he does. Okay.
Okay.
So,
So is that a lawyer or somebody who just does funding?
So Adam is a CPA.
Oh, okay.
That's what he is. So Adam is a CPA. So my attorney put this together is what he did. My attorney puts this together, puts the whole PPM together. He puts the operating agreement together. And then Adam is the one that puts the financial model together. And then those 3 things together kind of create how the fund is going to work. Okay. So those are like your big 3 document. And then also my attorney puts the subscription together, and the subscription is really the contract between you and the fund is what it is. Okay. You gotta sign the contract. Okay. So there's that.
I have it. I'm trying to read through what I've invested in. And so understanding it. So maybe this will help me do that.
Okay, well, and then the good thing is that what I do is I teach people how to invest in self-storage, so I'll along the way, I'm super open book, very transparent, and I'm just like a teacher anyway. So I could teach you guys, because the truth is like a lot of people that follow me, a lot of people that invest in my fund or whatever I do, they're really kind of newbies. So I just really kind of hold people's hand, whether it's like investing self-storage or investing in a fund. That's what I do, is I'll just hold your
Oh,
hand.
okay.
The thing is that we meet on a quarterly basis with the investors. So if you decide to put your money into this fund, you'll be able to meet with me, and then I will go over like how the fund is doing, and Adam is in the meeting, and my husband Pete's there, and Ann's here. She's here right now. She works with me, and Bonnie is our operations manager, so she's there. And everybody comes on and just gives like updates of what they're doing and stuff.
I
So
like
you'll
that. That's
really,
awesome.
yeah, you'll really get like every quarter we do that, and then we update the financial model on a quarterly basis as well. So you'll be able to take the new, like we just put the new financial model in, and then so those are the most up-to-date numbers, for the year. And then that way you can run your numbers, and you just keep, if we have to change something or change numbers, then we'll just change it for you. Okay. So that way you can always look into it. That's how we do it, at least. I don't know how, but that's how we do it. Okay. So, so then inside the portal too, you have, the documents tab. Oh yeah. So basically once you get access to the PPM, what you want to do is you want to upgrade to investor status. Okay. And the investor status is what's going to give you access to my dashboard. Okay. So like the way that it looks, because when you first get access to it, you're only going to get access to the PPM. And then you can look through the PPM, and then you say, oh yeah, I really want to get more information. Then you upgrade to investor status. And that's where you start getting all of this stuff up here. Okay. So you definitely want to upgrade to investor status. And the one thing that you want to do is go to the document section right here. And this is where you're going to find all the supporting documents. Okay. And I think there's 10. I'm not sure. Let's see how many there are, but there's so there's 14 entries. And oh yeah, I forgot. And we have to take one of these out first. I think I put this in twice. So can you put this down, please? Okay, yeah, I think I put this in. I just uploaded it, but I think I put twice in. So we might have to get rid of one.
I'll go ahead and do
So
that.
what you do is you just download this. You download the we're gonna download these are the executive summaries. These are the 4 facilities so Blairsville we already bought. I'll download that file, and then Carrollton is the one that we're trying to buy right now. So I'm raising money for this one. So I'm going to download that and take a look at it. Leesburg, we just closed on like 2 weeks ago. And then Macon, we bought in November. So there's 4 facilities total right now in the fund. Well, there's 3 that we bought, and then 1 more that we're trying to buy. Okay. And so I'll kind of go through those, but you can find, so every one of our facilities that we're interested in buying will have an executive summary, and that'll just be here under the supporting documents. So if you want to get in and see the deals, and then also the investor presentation, I'm going to download that. And that's where it has the information for the offering in it. And then you can also see the last quarterly report is right here, and then the replay of the meeting. So if you wanted to go back and watch the last quarterly report that we did, and you could watch that here as well. Okay. So really my point is that everything that you need is under the document section, and you can only get to this section once you upgrade to investor status.
Okay.
Okay. All right. So, all right, so that's good. So there's that. So now let me open some of these up, and then we'll start going. Oh, you know what? I think, yeah, did I do the financial model? Yeah, I think I did the financial model. Okay, good. So let me take this. Let me open these up. Let me open this. Get some of these open. I'm going to go over the 4 facilities, and then I'm going to also go over the presentation here. So, okay. So let me share my screen, and we'll do the investor presentation first. This is like the deck, right? Kind of gives all the information about the offering. It gives information about us, right? So like information about us. So I can remember, let's go down to the bottom page right here. This page right here, this is me and my husband. All right, so me and Pete, and so we own 12 facilities personally, And then now we have 3 facilities in the fund, and we're working on our 4th one right now. Okay. And so so we have 2 brands. One of them is the Miss Lillian self-storage brand, which is like our personal brand. And then under the Self-Storage Fund of America, we have the brand Mission Self-Storage. Okay. So, just so you know, and then everything under Mission Self-Storage, I'll just show you here, and I'll show you the website. It's here. So if you go to Mission Self-Storage, self-storage. This is what it looks like. Okay, so Mission Self-Storage, missionself-storage.com is what it is. And then you could see here's our Blairsville and our Macon one. We have not added the Leesburg location yet. And so eventually we'll add those, like once the website guy gets it done. But so you can always, this is our brand right here for the fund. Okay. And you could check it out if you wanted to come here. You could just look up Mission Self-Storage, it'll come up. Okay. And then let's see what else. Did I go to this one? Where did I go? Oh yeah, here it is. This is the pitch. Okay, so we own 12 storage facilities. We own them in Georgia and Florida. Well, actually, no, we just bought one in Tennessee. So we own Georgia, Florida, and Tennessee. And the Carrollton one is the one that's in Atlanta. So Carrollton is a suburb of Atlanta. That's the one that we're trying to raise the money for right now. We buy smaller facilities, right? So in the storage world, there is like 1 million or less. Then there's there's like 1 million to 3 million, and then there's 3 million plus. Okay, we do not do anything with the 3 million plus, right? Because there's like way too it's competition, it's primary market. It's a lot more money, and it's just like they're bigger facilities. So we focus our personal facilities under the Miss Lillian self-storage. Those are all like $1 million or less. And then I started the fund so I can buy like $1 million to $3 million facilities. And this is I call the sweet spot in the industry, because what we do is we buy severely mismanaged facilities. So these are facilities like nobody can fund, because like they're just not being run properly. So for instance, the Carrollton one that we want to buy right now, the owner has 3 different companies, and he was commingling the funds of all 3 facilities.
Oh,
so
boy.
When you look at his P&L balance sheet, like it's just all over the place.
What a nightmare.
Right? Yeah. So he has like no financials that you can look at, but the property is making on a good day $150,000 a year, and on a bad day $100,000 a year. So it's making money. It's just that he takes a lot of cash, checks, a little bit of money in the bank, this kind of thing or whatever, right? So, and he's just, he's had it since 2013, so 10 years, and it's just like, and I actually went there this Saturday and met him. And it just ain't looking good. It's just not looking good at all. So he wants to sell it. He wants to move to Costa Rica. That's what he wants to do. So yeah, so those types of facilities are the reason why I started the fund. Now a lot of times I'll really push creative deal structuring. Like if we can get them to owner finance it, we'll get it to owner finance. So the Leesburg one that we just closed on 10 days ago, I got them to owner finance that one. But this owner for Carrollton, like he will not owner finance. He wants cash. And it's $1.4 million cash is what it is. Now the property itself is worth well over $3 million. And if we can change one of the buildings to climate control, we can hit like maybe 4 million plus. But like we need cash, $1.4 million in cash, so I gotta like raise that money. Then there's not anybody I know that's going to give me just $1 million in cash. So I got to raise that money. And so that's what this fund is for. And and I've done that for all the other deals that we've ever done. I've always been privately funded, and I just raise money for them anyway. So it's not a big deal, but I want to be able to pool money together. And so that's the purpose of this fund. Okay. Now, the good thing is I buy mismanaged facilities. So because of that, I buy facilities 50 cents on the dollar or less, right? And so what that means is that I can pay a higher pref. I can pay 10% pref, so it's just like you lending me money. I'm going to pay you 10% on that money, right? It's the same thing for the fund. So if you put whatever amount of money that you put into it, you're going to get 10% on it, okay? And then the split is it's an 80-20 split. or it's a 75-25 split. So we have two milestones. If I hit one milestone, it's 80-20. And if I hit the second milestone, it's a 75-25 split, or depending on what the IRR is. And I'll show you that. Those are called it's called a waterfall. That's just like a fun term called the waterfall, right? Those are really just milestones is what they are. Okay. So I got to make sure that no matter what deal that I put in, the IRR has to be above 15% in order for me to get 25% of the deal. All right, so you can guarantee that I'll be putting in deals that get me above 15%. And the targeted IRR for the fund is 19%. But when I show you the financial model, we're like well above that, just because we buy severely mismanaged facilities. Now, these facilities, I'm buying 50 cents on the dollar, but the thing is they don't produce any income. They barely produce any income at all, right? So the first 6 to 9 months, you're not going to get a payout. Okay, so you just have to know that like this is like long-term hold. You got to be patient with us, because what happens is even though let's say Carrollton right now is making $100,000, it's only charging $50 for a 10x10, and they should be charging $100 for a 10x10.
Wow.
Right? So we go in and then we like piss everybody off by raising the rates, and then half of the people leave.
Yeah.
So even though it's making $100,000, the first quarter to 2 quarters, like we're just really
you have to stabilize it, right?
Yeah, that's what we're doing. And then we start making money, a little bit of money after that. So you just have to keep that in your mind that like the first year, just don't expect a lot. The second year, expect a little bit. By year 3, you should be rocking and rolling. And by that time, hopefully we can either refi out or we can sell, depending on where we are with that deal and with that in the fund, and then also like where the market's at. Okay.
So if I bring one to you that I want to partner on, do you do that also?
I don't really partner, honestly, because I don't really need to, and I have the fund right now. So I mean, I'm open to it, but like we really are focusing on the fund. That's our thing right now, is like we just need to, because I have to buy 6 facilities by the end of this year. So for this year, like we're not partnering. And everybody always asks, like, will you partner? But the truth is like nobody ever really brings me a deal anyways. And if they do bring me a deal, they just want to sell it, they don't want to partner. So yeah, bring me an amazing deal that's 50% or less on the dollar, and I'll take a look at it for sure.
Okay.
But yeah, I mean, and then also another thing is that us personally, we are vertically integrated. Okay, so our entire company manages, like we manage every aspect of these facilities. So my husband Pete manages our management company, and we have like phone people. Here's somebody's waiting. Let me put them in. We have phone people that are answering the phones. We have 3 people that are doing that. We have a person that onboards our facility. We have a person that does nothing but like calls people and gets them into the system. We've got boots on the ground people. I mean, essentially we have somebody that manages our auctions for us. I mean, so everything internally is really like vertically integrated. And the best way to do that, I mean, it's the best way for us because it's the cheapest way, right, to do that too. So, when you get out, like, so if you're going to partner with somebody, you just have to keep that in mind. And our boots on the ground people are Georgia, Florida, right? So like, we can't go all over the country and do this, we just like, we're based in Georgia and Florida is what we're based in.
Okay.
All right. So that's kind of where it's at. And that's where the fund is looking for deals, is in Georgia and Florida. Okay. And then, okay. So yeah. So the offering, let me just get into the offering real fast. Here it is. Yeah. So we are offering, we're offering a 10% pref, which I told you, anything that you put in, you'll get 10%. And there's an 80-20 split or a 75-25 split. Okay. The goal is a 19% IRR, but because we buy 50 cents on the dollar. So we typically are going to be way more than that, but this is kind of where our targeted IRR is. And we're trying to raise $7.875 million. The whole period is 5 years. So whatever amount of time that, I mean, whatever amount of money that you put in, just know that most likely you won't get that amount of money back until, until towards the end of year 4 or 5. Now you'll get distributions, and if we refi out, you'll get money from that. But you just think that this is a 5-year hold quarterly, and then you get quarterly distributions. As long as we're making money, you'll get a distribution. If we're not making money, then you will get a distribution. Okay. So, okay, contribution we are also sponsoring and putting in 4%. So we are putting money into the deal, because a lot of people ask that. And the minimum investment is $25,000, and you have to be an accredited investor in order to put that. An accredited investor means that you need to have a net worth of $1 million, or you need to make at least $200,000 or $300,000 a year, depending how you file your taxes. Okay. All right. Here is the waterfall that I was talking about. If we don't make the 10%, then there's just a 96-4 split. It's 4% because we're putting 4% in, so we're going to get paid on that 4% into the fund, and then everybody else gets to split 96%. If we make 15%, sorry, if we make between 10 and up to 15%, it's 76-4-20. So we'll get the 20% promote, we'll get 4% as a co-invest, and then 76% will be split between all of the investors. If it's if we get above 15%, then it's a 25-71 split, right? So 25% to us, 4% to us, and then 71% to y'all. Okay. And then fees, like everybody's, what's the fees? The fees are 0.625% on an annual basis for the management of the fund. And then an acquisitions fee is 0.50% of the gross purchase price. And that's a one-time fee. There's no refinance, there's no disposition fee. The development, if we do develop, so for instance, Carrollton has a building, it's a 20,000 square foot building that we could change to climate control, which I really think is a good idea. We didn't run the numbers on it, but I think if we could do that, we might be, if I could raise the money internally, then we could do that, maybe later once I stabilize the property. But, so we'll get a little bit of payment for that as well, for managing that. Okay. You can see the deck inside of the portal, remember, so it'll go through and you could check it out, and you could see, where we're, what our strategies are and stuff like this. I kind of went over this anyways, and how we manage. All right. So we're completely remote. We do not have anybody manning the facility. So we are totally remote, totally online, totally automated. Okay. So we don't buy facilities that are big enough to support somebody there all the time. We're typically like 100 to 200 doors, maybe 100 to 300 doors or something. Okay, so like we just closed on one that was like 150 doors plus some commercial space. We bought one that was like 200 doors plus some parking. That's kind of where we're at. That's like our sweet spot. Okay. All right. So that was the deck, and that you can find in the portal under documents. Okay, if you wanted to look at that again. And then I'm going to go over next the something. Pull these up so that I can open them. Yeah, so these are the types of deals that we've bought so far, just to give you an idea. And let me see, I'll first go. The first one that we bought was Blairsville. Blairsville is in like the North Georgia mountains. And let me see. And this one we picked up for $1 million. It's 135 doors, plus it has an apartment, plus it has an office with a garage, like this little space right here. And it's got climate control. Here's the indoor climate control. It's got a huge piece of property, like a huge, it's like half an acre. That's just like that he just threw in because he's like, I don't need this property, just take it. And there's a house on the property that the woman is living there for $400 a month. Her last day is May 30th. And then we will be able to rent this house for like $1,500 a month, a minimum $1,500 to $2,000 a month. That number is those numbers are not even included into the numbers that we ran. But because Yeah, because but she'd been living there for 10 years at $400 a month. And then once the owner sold the place, she was like, I'm out. I'm just gonna get out. So she just needed a couple months to get out. Okay, so it's a really nice house, got koi pond and everything in it. So this is a very nice facility. The town itself only has a couple hundred people. It's a really small town in the North Georgia mountains, but the radius and the growth, you could see the growth rate is at 16%. I'm sorry, 3.61%. It's growing. This is the North Georgia mountains. It's like growing super fast. It's a very, very good location. And then here's the facility. Here's the piece of land. Here's some more storage units that we could even add more here if we wanted to. And then here's the climate control. Here's the house with a little barn. And this piece of property, we cleared it. And this is where we're going to do our boat and RV parking. And that's not even included into the numbers as well. So you can see it came with 3 properties. We bought it from a guy named Ray. He was getting too old to manage this, so he just sold it to us. Okay, and here's information about this. Is inside the portal, so you can take a look at this one. Okay, you could see the demographics and stuff of Blairsville. Okay. Okay, so this is the numbers. We bought it at $1 million. He was making $116,000. He had 136 units. It's 22,200 square feet just for the storage. Just for the storage. He was at 52 cents a square foot, and he should have been at 99 cents a square foot. Actually, he should be above $1, but we just ran the numbers at 99 cents to be safe. You can see we bought it for $1 million, and we're going to, just with the storage, we're going to take it to $2.8 million, not including the RV parking, and also not including the house once we get that ready to be rented out and stuff. We have a handyman ready to go on June 1st to get in there, clean the place up, and then we're going to rent that out for a minimum $1,500 to $2,000 a month. Okay, so that's gonna be really good. And yeah, so this is the unit size, the competitors and stuff. But this is available to you on in the portal. And then this facility here, this is the one that we're trying to raise the money for right now. So you can see it has that huge 20,000 square foot building, and then it also has 171 doors of storage, or 170 or something like this, doors of storage. So it's got a lot of storage. It's got 3 buildings, it's got 6, there's 9 buildings total is what it is. And we did not even run the numbers on anything with this building. All right. He's making 2,000, I'm sorry. 6 times 8 is what he's making, $4,000 a month, but I didn't even put that money in because I didn't know if we were going to do anything to that, all right, at all. So I just didn't even run the numbers with it. All right, and so yeah, see, this is the building. He's got 9 doors. Each of these is 2,000 square feet. It has a bathroom in it. He rents them out for $600 a month. I mean, 2,000 square feet in Carrollton for $600 a month. It's a steal. It should be about $2,000 a month for each of those. So we could rent that out 2, 4, 6, 8, 10, 12, 14, 16, 8 and make $18,000 a month. So we'll compare $18,000 a month to making it into climate control, and then we'll decide which one we want to do. Okay. And I mean, these people have been there forever. So like, there's probably some renovations and stuff that need to get done to them as well. And then, okay, here's this is the storage. You can see 9 buildings. It's not bad at all. I mean, the units itself are not bad. We were there this Saturday, did a walkthrough, and everything is really good. It does, I mean, there's a couple of unit doors that need to be fixed and stuff, but honestly, really not a lot of anything. I didn't put hardly any CapEx in this thing. So this is Atlanta, and this is Carrollton. So it's a suburb of Atlanta, right? So I would call this like maybe sub-primary to secondary market, because Carrollton is booming. This whole area is booming right here. It's a very, very good place to. Here's the facility itself. Okay, here's the borders. And there's 44,000 people within a 5-mile radius. There's a lot of people in this area, honestly. And so we picked it up for $1.4 million. He's making 150. There's 175 units, but it's making about 150,000, 100 to 150, depending on, you know, there's about 150,000, but there's probably about 30,000 in the rears, honestly, because a lot of people haven't paid. So I'd say 120,000 is a good number, but he's at 30% vacant, and he has 25,800 square feet just in storage, not even including the building itself. He's at 69 cents a square foot. He should be at 95 cents a square foot. So I mean, it really, Carrollton is really, I mean, it's almost $1 a square foot, you know, and you should really be at that, but he just doesn't charge that much. So we picked it up for what it's worth, $1.4 million. But we're going to take just the storage to over $3 million just by raising the rates and getting at least up and raising the rates. Okay. So that's that. And that's not even including the building. I did not even run the numbers on the building. Okay. So we could make 18,000 plus, you know, a month on that building if we can get that thing cleaned up looking nice and stuff as well. Okay. So that's that. All right, and then this is the one that we just closed on like 10 days ago, maybe like 2 weeks, 2 weeks ago. We closed on this one. Okay, this is in Leesburg, Florida, which is a suburb of Orlando, like kind of like 45 minutes north of Orlando. This is a booming area. This is the facility itself. This is not what it looks like now. It's already been painted. We got it painted. I'll show you pictures of it. That's what it looked like. It's a all climate control building. So all climate control. I'm sorry. And then up in the front is commercial space. And so the side over here is a parking lot, which we can use for parking as well too. The commercial space makes $12,000. Doesn't make it now, but we have a tenant that just moved in, and it's going to be making about like $12,000 a month. The storage right here makes about $12,000 a month. It's supposed to be making about $25,000 a month. Okay, I'll show you the numbers. It's at 29,000 people in Leesburg. I mean, it's a very nice area. It's, you know, it's Orlando area. A lot of people in the area, very populated. There's only like 4 climate controlled buildings in the area, like within like I think a 5-mile radius or something. So there's not even a lot of competition. So it's down here. This is the building itself, and this is the parking lot. It's got a huge big parking lot that we can use. That's not really being used at all. And the climate, that means the commercial space is kind of right in this area right here, and then this is a 2-story building with storage on both levels. Okay, so that's that. That's the building itself right here. Yeah. Okay. And there's the building. Isn't that a good looking building?
Mm-hmm.
Yeah, that's a good looking one. This is in Leesburg. I mean, Leesburg is where Beacon University is. Not Beacon University, Beacon College is what it's called, which is one of the largest colleges in the world for disabled people.
Mm.
Interesting, huh? So a lot of students rent from this, and they want like 5x5s or 5x10. So there's actually not enough. Like every 5x5 or 5x10 during the school year gets booked up, and like the 10x10s and the 10x10s and the 10x20s are harder to rent. So Pete is going to just get in there and put a whole bunch of 5x5s and 5x10s in there. Because even 5x5s and 5x10s, the price per square foot is more. Like you get more money for those sizes. So if we can rent those out, we might as well. Yeah, because you think about it, like you'll charge, you know, $100 for a 5x10, and you charge, you know, $125 or $150. You know, so your price per square foot goes down on the bigger units.
Okay.
Here's the climate control. It's nice inside, and it's brand new. It's brand new climate control inside. I mean, everything works perfect in there. That's Pete. This is my husband. This is Lillian, our daughter. And this is it. Yeah, here's the competition. There's the Cube Smart. It's competition. It's got some climate control, not all climate. This is a Gator storage competition. It's got some climate control. It's not all climate control. Right, so you've got, and then here's Lakeside, which is like a couple miles away. You could see that one has some climate control in it. It's a nice one. So, I mean, honestly, we don't really have a lot of competition. So I picked this up for $2.4 million and we got it actually owner financed. It was making $108,000 for the storage. It should be making $205,000. It was 50% full, right? So we should be at a like right around $2 a square foot. I mean, climate control typically goes for like $175 to $2 a square foot, kind of, or maybe a little bit higher than that. But that's kind of the average. So we should be up in that area if we were full. So we'll be able to raise the rates just a little bit, but we just have to get that full is what we have to do.
Mhm.
Now the commercial is making, I don't know if you put commercial on here. Let me see. Yeah, I don't think you put it in here. But yeah, here it is. Commercial is $126,000. I think Ann did this one. Yeah, so she put this in, but $126,000 is what we should be making on the commercial part. This actually does not include the parking. We did not add parking in here.
Mm.
But we really should be making $350,000 or $340,000 a year, but we're at $100,000 loss because of the vacancy, right? So it's only really making about $234,000. Okay, and it's going to cost us about $85,000 a year to run it, and we'll have an NOI of 150. Okay, and then he gave us owner financing. So we got 2.4 million. We had to put 30% down at 5% interest. We had 2 years of interest only payments. So our mortgage is only $7,000 a month. And we're making, as of right now, well, actually, as of right now, we're making like $10,000, but as of like next month, we'll start making about $20,000 because the new tenant's going to start paying. And they're paying like $9,000 a month or whatever for their stuff. So yeah, so that's looking really good. Yeah, so this is a really good deal that we got, and we're gonna take it to 26% cash on cash return. And you could see the numbers here. We got owner financing right here. It's the gross income should be around $32,000. Our monthly expenses, operating was about $7,000. The NOI is $25,000. Our mortgage is $7,000. So we have a net income of around $18,000. So once we get it full and stuff, that's where we'll be. We'll have a net income of 18-ish, thousand a month. But you just have to give us some time to get this thing stabilized. You know what I'm saying?
Yeah, sure.
All right. So that's that one. And then finally, the last one is Max. We bought Max in November. This is in Macon, Georgia. And this is actually a good deal. This is the ugliest storage facility in Macon. Is what we got. Okay? And you can see half of it's blue, and then he ran out of paint, so he never painted the other two buildings on the back. And yeah, and we've been working on getting this one fixed up. We have a boots on the ground person that's working hard, trying to get lots of doors broken. Actually, this facility is 170 doors, and he was only making $14,000 a year. That's it.
Wow.
So this severely mismanaged facility. This is a warehouse that we're converting into non-climate control indoor units. And actually, Travis is our boots on the ground person. He's already in the process of building those units out. So we'll have non-climate control indoor units, and then we'll have outside units as well. That's what we'll do. This was full of somebody's crap. We did an auction, and then somebody came and bought everything in that place and emptied the whole thing out for us for free.
Nice.
Awesome? And it also came with 2 cars. There was 2 cars in there.
Mm.
I think they really.
So then, do you change all the signage and everything to your branding?
Yeah, it's all changed. We changed that first week. Yeah, we get in there all the time. My husband, yeah, everything gets all changed. He went up there and put the sign out himself.
Okay.
He went out there and he was like, "We're going out and changing this thing now." It says mission self-storage is what it says. And then a whole bunch of stuff to fix this thing up. But I mean, it was just a dump, honestly. And he just wasn't running it properly. So you have to give this one's the worst of all of them. This will take us the longest to start making money on. All right. So this is actually it's for the first year, this one is bringing everything down is what it's doing.
Oh.
So, but this one is going to be making us the most amount of money. So This is all this. So yeah, there's 38,000 people within a 5-mile radius. There's 80,000 within 188,000. So it's a really good deal. It's actually on 6 acres. We got 170 units on 6 acres because this whole piece of land right here is included.
Oh,
And
wow.
this is our storage facility right here. This is it. So he's already like, he's like, I'm going to clear this out. I'm just parking. He's got a whole bunch of plans going on and stuff. So I think he'll make this look really good. This is one of
Mhm.
our competitors right here. This facility was on the market for $2 million. So I mean, I wonder what it sold for. I'm not sure, but it was on the market like maybe 6 months ago for $2 million.
Hmm.
Right? Ours is gonna be way better than that. We're gonna get this thing all fixed up. So $375,000 is what I picked this thing up for. So I got it for a steal. I got 171 units for $375,000. Now only 92 of those units are operable. So 15,000 or 14,600 square feet is operable, and there's 20,000 square feet of storage, not including that commercial space, that big warehouse. We did not even put that in. All right, so we'll be making some extra money on that. But he was at 88% vacant. All right, so 66 cents a square foot. We're going to take it to 78 cents a square foot. We paid $185,000 too much for this facility. All right, so we're at a -2 cap rate, but we're going to take it to a 24% cap rate just by leasing it up. That's it, just fixing it up and leasing it up. We put $200,000 in capex in, but it's not really going to take us that much, honestly. We haven't spent hardly any money except for just boots on the ground. Like, we have the best boots on the ground person, Travis. He's a contractor. He could just do everything himself. All we have to do is just pay him.
Yeah.
So it's gonna be interesting to see how much we save and what it actually comes out to in the end. But you can see that we spent $375,000 to buy it, and it'll be worth over $2 million just as is, not including anything we do with the back parcel or the indoor storage units that this could probably be able to fit like 20 doors just into that building. So it's a really good deal. I'm excited about it, but we had to pay cash for it. So we'll get a 24% cash on cash return as is right now. So really, really good deal. I'm excited about all the deals. I'm really, really excited. Now let me show you guys the financial model. So you guys have access to that as well too. Let me see here. So this is where you can run your numbers. Let's see. Did I put it to the right one? No, I think. Did you see the financial model, or do you see the whatchamacallit? What do you see?
The spreadsheet, it says cumulative.
Yeah, spreadsheet. Okay, that's it. Good. Okay. All right, so this is the financial model. This you'll have access to. There's only like these 2 spots are the only place that you need to put anything you need to do anything on, so that you could put how much money you're going to invest and when you're going to invest it. So let's just say you put $100,000 in and you invest it on like 5/15, okay? All right, and then here, these yellow boxes is just, here's our 4 deals. And then are we going to refinance them or not? Right now we have them all on refi. We're going to refinance them all out within 18 to 24 months. Okay, that's kind of where we're at. This is how we're running our numbers, but we can, depending on the market, you can put it to, you could put it to anything. You could put it to 24 months. Somewhere between 18 and 24 months, we're either going to sell these or refi them is what's going to happen. Okay.
So it does the fund, it just buys whatever you're doing at the time, or is it, or how does that work? Because with the apartment I'm in, I'm just in that apartment.
Yeah, this one is like, I'm putting 6 deals into this fund.
Okay.
So this is not syndicating just one deal.
So then how do you put like different amounts in different deals, or how does that work?
Yeah, whatever. I mean, whatever amount of money that thing costs is the money I'm trying to raise. So for instance, the Carrollton, the one that I'm raising right now, it's $1.4 million. So I need.
Okay, so my question is, does my money go to one deal, or does it go to?
No, it goes into the fund. It just goes into the fund. So you're going to get payment on all of the deals is what you're going to get.
Okay.
Okay, so
So
like,
is this called crowdfunding then? Is that what
this
this?
is crowdfunding. This is
Okay.
exactly what this is. It's crowdfunding.
Okay,
Okay. So the good thing about this kind of fund is that it's not just one fund, it's four. And it's, I mean, it's 4 or 6 or however many you want to put into one fund. So like, you know, as things go on, like you'll be getting payouts on all different types of facilities for like different reasons.
oh, okay,
So there's a
that's
lot
cool.
going on. So you may just get a distribution on one, and then we might refi out the other. We might sell one. We might just hold on to one. I mean, there's all kinds of things that could go on in this fund. So right
Okay.
now we're just in like, you know, the phase of like raising the money and buying the deals, right? And we'll probably by the end of this year we'll be done raising money. We'll have all of our stuff bought by the end of this year, maybe beginning of next year. And then by the end of 24 into 25 is when we're going to either be paying, you know, doing refis, or we're going to be like selling, or whatever we're going to be doing, right? So that's kind of how the financial model is set up too. So as you can see here, like I'm putting I'm putting $100,000 in. Okay. And that shows you like you're $100,000 in debt right now. And then it shows you kind of, okay, oh, by like 12/1, you're going to be in the plus of 2024. So by the end of 2024, you're in the plus. That's kind of how we're projecting it. And then once we start refining out is when you start getting like all your money back. See, I'm refining out all these facilities right now. Let's just say that I don't refi out Blairsville, right? Now you could see how the changes is, right? So now we're going to hold on to Blairsville, and we're not going to refi out that one. You'll get the Blairsville stuff you'll get at the end, right? So you can see refining out just gives you the money faster. But if you know, you'll make about the same. It's just that you'll get a lot of, you know, less money more money. So less money when you refi out on the back end of stuff, you see. Right, kind of how that works.
So
And you can see the
those,
IRR too. I'm sorry, go ahead.
each one of those is if it's not 200,000 at that point, in every point, that's the total amount, or
That's the total amount. No, that's your total amount. So like you're gonna get the refi here, and then you're gonna see you getting $1,000 distribution or something every quarter, a couple $1,000. And then you're gonna get a big distribution on the end. So you can see here, you're putting $1,000 in, and you're gonna get total $398,000 back in 5 years. Right, so that's your total amount.
Is this in the, oh, that's probably not in the
the PPM, the subscription, the portal?
No, what's it called? It's the analyzer. This is something different.
This is the analyzer right here. This is the financial model right here.
Okay.
Why? What were you thinking about?
The analyzer for purchasing the deal analyzer.
You know, like my deal analyzer to run the numbers and stuff.
Yeah.
This is the financial model of the fund.
Oh, okay, separate.
Of the fund. But as you can see here at on the tabs, these are each individual numbers for each facility.
Oh, okay.
It's kind of internally, it's like the internal deal analyzer for the fund. I mean, sorry, for each facility in the fund.
Okay.
Right. So you can see here, Leesburg, you know, the loan amount was 1.7 million. We put $862,000 in equity in, right? Total sources 898. The purchase was 2.4 million. We had lenders fees, hard money, renovation costs. We have, so this is really the deal analysis of each individual deal. Okay. This is the number. These are all this is the number. So here's the historical expenses, and here's what it's supposed to become, right? So you can see here that it's supposed to be making $216,000, but it's really only making $108,000. Remember, because it's 50% vacant. And this one, it should be making 244 once we get all the revenue in of everything that we're doing. Then it's going to make 350 grand.
Okay.
Right, here's the expenses to go through all the expenses, and here's our NOI. Okay, and then here's our vacancy, 50% to 8%. Here's like our improvements plan, right? This is how many months it's going to take us to get to capacity. And then here's the refi. Like when we refi out, this is what the distribution is going to be. We're going to refi out at 7% at 65% LTV. We're going to get $2.7 million back, and then we're going to refi and distribute that money to everybody.
Okay.
Okay. And then here's our exit strategy. In year 5, right, for month 46, we're going to sell it and make another $2.8 million and distribute that to everybody.
Wow.
And then here, because it's supposed to be Leesburg is worth well over $5 million. All right, but we bought it, so I'm going to really double the value of that property. Okay, so that's kind of how that looks.
Mm-hmm.
So that you can look on every facility. Here's Carrollton. This is the one that we're trying to raise the money for now. Okay, this is the one that it's going to be like, it should be making 220 right now if it was full, but it's only making $149,000. Once we raise the rents, it should be making 294, and it's only, and then 270 is the money after the vacancy. And that's not even including that building, whatever we decide to do with that building, you know, but and then here's the expenses, here's the the vacancy, here's the improvement schedule. This is kind of how it works, right? There's the refi in 2 years and 24 months. And here is the exit strategy. Okay, so same thing for every single one of them on these, okay? And then you can see here that this is like the fund numbers, right? You could see this is the actual numbers on a month-to-month basis. This is our assumptions. And then on a quarterly basis, we will update this financial model and send it out to everybody so that you guys have the newest and latest and greatest. But you can see here's the waterfall. Here's the hurdles, right? So here, if we only reach 10%, it's here. If we reach 15%, the numbers are here. Here's the distribution. If we meet the if we meet the 15% above, then it's here. All right, so you can go through, you can scroll through the numbers, and then you can see like where our assumptions are, over the course of X amount of years, all the way to the end. This is where you're going to be making all your money. This is kind of what it looks like right here. Okay.
Hey.
So you can see that here. So that's what the financial model does, is show you our assumptions. All right. These are always assumptions. But this is kind of what it's looking like up till now. Okay. So you can see here, we put $100,000 in, and you can see here, like, okay, in 6/30, you should be making this much money. Oops. Sorry, by the end of June, by September, you should be making this much money. And then you could see once we refi out, this is where you get a big lump sum. Like we're going to refi out a couple of facilities, so you'll get a big lump sum. And then here at the end, you'll get some money as well too.
Okay, this is awesome.
So that's what the financial model for. Yes, that is why you should be looking at the spreadsheet. You should be getting into the portal, getting into the supporting documents, looking through everything that we have there. There's only 14 documents, whatever, so you could look at those and then just check everything out. And then if you have any questions, just let me know. We can meet on Zoom, or if you're ready, like you're like, oh yeah, this sounds good, let's do it, or whatever. Then, the next step is inside the portal. Just so you know, if you say, yes, I do want to do this, I can put some money in. Then inside the portal, you're going to see steps 1, 2, and 3. Step 1 is to fill out the subscription. And if you can fill it out individually, or if you have a spouse or partner, you can do it that. If you do it through your IRA or 401k or retirement account, it's right here. And if you go through a company, it's right here. So just pick whichever one you want to do. Okay. And then this is where you put your accreditation letter to verify that you're accredited investor. Step 2, and then step 3, this is where you get all the information to wire your money over.
Hey.
Okay. So that is it. And then down here at the bottom, you can see also here's all the documents. You could just go here. Here's our news. We're trying to do weekly updates now that things are starting to go. We're trying to do weekly updates. We'll put those in on all the facilities. These are our 3 assets as of right now. And then hopefully, you'll invest with us so that we can close on the Carrollton one. And that's the next one that we're going to be closing on.
Okay, cool. Great.
And that's it. I think that's it. And I know Steven's here as well too. Did you have any questions? I don't know if you're going to mute yourself. Steven says, can you go over the debt and rate on each site thus far? How can we see the returns? Okay, I went over that in the financial model, but let me know if you want me to go over any more in that. Okay. That's in the financial model right here. So right here, you can see, if you go click on one of these 4 tabs and scroll down, you could see the debt here anyway. So initial loan amount, 0. We paid cash. There's no debt, right? Macon, we paid cash. Carrollton, we haven't bought yet, but we have to pay cash for that. All right, we can't get a loan on it. Leesburg is the only one that has debt on it. This is the only one. Okay. Now, and then you said, where do you get the loan? Like if we sell it or refi out, that's here at the bottom. This is all the numbers. Now, these numbers are all based on the very first, these boxes here. So if I came in and I changed it to LTV is 75% and I changed it to, 6.5%, then you can see the numbers change, and that's Blairsville. I'm going to refi in 24 months at 75% LTV, 6.5% interest. And you could see that changes here. It's now 6.5% interest, 75% LTV. And then this is how much money we're going to get back on that. So it really just depends on the type of loan, what kind of loan we get, the numbers will change. So that's why this model has to be ever changing, has to be dynamic. Because like we just don't know what our numbers are going to be, but we're kind of running at 65% LTV, 7% interest is kind of where, like, I'm just like, okay, if we can't get this, then we're not going to get a loan. Now, if you turn all these off, what I'm saying, like, you just turn them off. I mean, the thing is that you make the same amount of money, you just don't make it, quicker. You make it on the back end. Like, so let's just see, you see how it's like, if I just don't get a loan, you're just not going to get that money back until year 5. You make actually you make more money because I don't have to pay all those mortgages and stuff. So that's the difference between refining out and not refining out. Refining out means you're going to get some money up front, but you're going to make less money in the long run. And not refining out is that we're holding on to it, and in 5 years you're going to make more money. Okay, that makes sense to y'all. So, but the good thing is that we have a lot of facilities in here, so it'll be like a mixture of everything. It'll just be a mixture. That's the good thing about it. Okay, and then is the loan fixed? Are you talking about for Leesburg? On my Leesburg facility, I have a 2-year interest only loan. It's a 2-year interest only loan. So I am paying $7,000 a month for 2 years on Leesburg. That is a fixed amount of money. Now for the loans, like from a bank, like I will try to get fixed loans, right? Because SBA, I would never ever do SBA unless it got down to like 5 or 6%. But the thing with SBA loans is that they're variable rate loans. So like, I'll just go, if we have enough money, I could just go get a conventional loan and put 20% down, refi it out, whatever it is, and then just get like a fixed rate. We could just go to a bank and do that. Okay. So most likely that's what we'll end up doing when we refi out. Okay. It will not be variable. It'll be fixed. Okay. I meant distributions to date relative to the investors amount as a low fixed rate. I meant distribution to date relative to the invested amount. Okay, so those like distributions to date, are they the loan is the like distributions as in like this? So these are variable as well too. Like depending on how these come out, this is all variable. Okay, so as of right now, like we're planning on refining these all out before 24 months. So yeah, these are not fixed. No, nothing is fixed. This is all assumptions. This is assumptions. I am assuming that in 24 months or less, I am going to refi out these facilities at 65% LTV and 7% interest. That's our assumption. Cross your fingers I can do that. But if I can't, then I'm not going to do it because I don't want to spend any more than 7% interest on a mortgage. Okay, does that make sense or no? Is that it, Stephen, or no?
Actually, I'm trying to understand what distributions have been given out thus far?
Nothing, no distributions,
Okay,
none. It'll take, you know, a year to get your first distribution on any deal that we do. It'll take 9 months to a year. Because I buy severely mismanaged facilities that don't make enough money to have distributions. You know, so just know that like you'll get a little bit of money maybe from like the first couple that we have, but like because we've had those now for like 6 months, but like it takes like 9 months minimum to make money on any deal. And the Macon property that we bought, it's going to take us like at least 12, let's see, at least 18 months to make any money on that thing because it was a disaster zone. So this fund is the purpose of it is to buy mismanaged facilities and to take 18 to 24 months to stabilize and to make money off of them. So just know that it's going to take us some time to pay you out.
I understand that. I guess I'm just looking at your financial pro forma, and as I entered varying amounts of invested funds and dates, it's showing me dividends within the next month and subsequent quarters.
Well, 630 is our first distribution, and that would be from Blairsville. So Blairsville we bought in August. And we are starting to actually make money on that one. So you will get a little bit of a dividend on that. But and that's if you put 100 grand, you'd make some money on it.
Yeah. I mean, I've put in amounts from 100 to 500K, and obviously it's showing rather large amounts varying dependent upon the amount. But I guess I'm questioning, are those the actual anticipated dividends?
Well, that's the money that everybody's going to be like sharing it. You know what I'm saying? That's the money that like, you know, everybody's going to be getting back. Yeah. So that's what we're planning. So for instance, on the Blairsville one, I bought it for $1 million and it was making $8,000 a month on it in August, and we closed and it was 100% full. Okay. And then we raised the rents, pissed everybody off, and 60% of the people left. All right. And so now we are back at 50% full, and we are making $12,000 a month. So we are on track to make, you know, $24,000 a month on this facility. So, and we've been now doing that. Let's say we started making $12,000 a month in January. So we're about a little bit more than that now. So we're slowly making money on that. Okay. And that's the distribution that you'll get back from. Does that make sense?
Okay. No, yeah, I understand.
Yes. Okay. Go ahead.
Yeah, I understand what you're saying. I just wanted to verify that the actual numbers we're seeing as we input the invested amounts is what we'll be receiving.
Well, just think about it. I mean, if we're making $20,000, let's say $20,000 a month on a facility, is $60,000 in a quarter, right? And you know, we only have like, I think what, 25 or 30 investors, and most of them are putting in like 50 grand. So, you know, it just really depends on how much money you put in. But like if you put $50,000 in, you know, we're going to be able to share in. It's not 60 grand. You'll probably have like, you know, it only cost us for each facility maybe $25,000 to manage it a year. 25, it doesn't cost us that much money to even manage it. You know what I'm saying? It's like, as you know, we run our numbers at like 35% for management.
Yeah, no, I understand. I'm just verifying. That's all.
Okay. If you have if you do have any questions about the numbers, then you could also really set up a time with Adam. He's the fund manager, and you could ask him questions about the financial model. We can always share that with you as well. Okay, so he could, if you need him to go over like how he calculated all this up and stuff.
Okay, yeah, I think that would be advantageous.
Well, I'll make sure Ann emails you, and she'll get you out Adam's information, okay?
So is he the CPA?
Yeah.
Okay,
Mhm. Yeah, he's the one that put this financial model together. So, I mean, if you have any questions, he could always answer them too, okay?
Okay, yeah, that'd be perfect.
Okay, well, we'll get that to you so you can set an appointment with them, okay?
Great, thank you.
Okay, awesome. Any other questions? Final questions. Okay. All right, well, let me know if you have any questions. Ann's gonna email you and reach out and follow up. And if you have any questions, we can always set up a Zoom meeting or something. And then you
Right.
just know that you have the subscription is the next step if you're interested.
all right, thanks for all your information.
All right, okay, take care. Have a good night.
Bye.